last year. But the dollar was king even before it started to hit this decades-long high. So what's different now? Even though the US economy is hurting, the dollar is still rising. And that's because it's seen as the ultimate safe haven. This is Daniel Lacalle. He's one of Europe's most outspoken economists on currencies and the markets. He's well known for warning about the consequences of the mismanaged central bank policy, the kind of policy coming home to roost now.
The dollar is the equivalent of a house with a lot of windows and doors in the middle of a fire. So when there's trouble in the global economy, we have high inflation and weakening expectations of growth, the dollar strengthens because its position as reserves and as status of reserve of value is strengthened.
Another reason for the dollar's strength lies within this building, the Federal Reserve. Unlike the world's other leading central banks, the Fed has made the biggest commitment to taming inflation.
Today, the FOMC raised its policy interest rate by 0.75 percentage point.
The Federal Reserve is the only central bank in the world that pays attention to the global demand of its currency.
The Fed is arguably the world's central bank. Where it leads, others will follow.
The other central banks like to play the Fed without having the capital attraction, the investor security, and the global status of the United States and the US dollar. So this is a big problem because when other central banks decided to follow the Federal Reserve and print money aggressively, massively lower rates, what basically they were doing is taking a negative bet against the dollar.
Betting against the dollar simply hasn't worked, and in the case of the euro, something more alarming is at play. Europe is in a bind, to put it mildly. The energy crisis is escalating, and the European Central Bank is on the back foot. As a result, the Eurozone is having a tough year. The crisis was kicked off by this. Russia's invasion of Ukraine led to Western sanctions against Moscow. In retaliation, Vladimir Putin's regime halted gas supplies to the EU via the Nord Stream 1 pipeline in early September. That pipeline, and its sister pipeline Nord Stream 2, were recently the target of suspected sabotage, and the continent is scrambling to secure gas supplies and store up ahead of winter. This crisis is battering the euro. Let's take a look at this chart, showing the price of the European benchmark for natural gas. As you can see, it climbed quite steeply between April and September. Now let's add the euro index, which measures the single currency against the dollar. The euro and natural gas are inversely correlated. The energy crisis has driven inflation higher, but the European Central Bank has been much slower than the Fed to take action.
The ECB has copied the policies of the Fed and actually been a lot more dovish than the Fed.
With growth and inflation at the mercy of the energy crisis, the ECB is left in a balancing act as it tries to maintain credibility. And that credibility could be threatened if it doesn't hike rates further to tame inflation. But doing so could send the Eurozone tumbling into recession. The linchpin of the Eurozone is struggling too.
Well, I think that the German economy is in very dire straits. It's a very, very difficult situation because the alleged benefits of having a relatively weak currency have been offset by the absolutely atrocious energy policy.
Germany has been exposed to Russian energy imports since before reunification, and prior to the current crisis, it imported 32% of its natural gas needs from Moscow. Strangely, it didn't necessarily need to be this way.
We must remember that 15 years ago, the European Union produced more natural gas than what Russia exported, and that went the opposite way very, very recently.
All of this has sent the euro plummeting, falling past parity with the dollar for the first time ever. In the short term, it may stay at this level, and with winter on the horizon, who knows how far it could fall. If you're interested in foreign exchange markets and want to start trading Forex CFDs, Capital.com provides all of the tools and insights you need to learn how to trade with confidence. Click on the link on the screen to go to capital.com and start your trading journey today by using our demo account, all for free. Pound sterling once dominated the world and was the first world reserve currency. But that all changed following the Second World War and the emergence of the dollar as king. In September 2022, the pound sank to an all-time low against the dollar and may even be headed towards the unthinkable: parity. But while the pound is subject to many of the same energy problems as the euro, it has some upsides. Namely, its historic status as an independent reserve currency and the UK's history of political and economic stability.
I'm not particularly concerned about the British pound as a reserve currency, but I'm certainly concerned about this view that comes from the Bank of England that nothing that is happening right now is a consequence of the excess of 2020-2021. The balance sheet of the Bank of England has not fallen at all. Neither has the ECB's or the Fed's. It needs to reduce its balance sheet. It needs to increase rates.
The Bank of England, like the ECB, has been tepid when it comes to dealing with inflation. It was slow to raise rates initially.
It's not compulsory for the Governor of the Bank of England to be an unreliable boyfriend.
However, something else could be hampering confidence in the pound. Politics. Since 2016, Britain has had 4 prime ministers, all from the same political party. This quick-fire churn of premiers has not exactly inspired confidence in the UK economy. Liz Truss, the new Prime Minister, won her leadership election promising a return to growth for the British economy.
I will deliver a bold plan to cut taxes and grow our economy.
Upon Truss becoming PM in early September, the pound dipped to $1.14 and has continued to spiral. But attaching all the blame to the new leader could be premature.
I find it funny, to be fairly honest, to read that the reason why the pound has weakened is because of the announcement of the so-called Trusonomics program. That makes absolutely no sense. The reason why the pound and the yen and the euro and so many other currencies have been falling and why bond yields are going up is because of the vacuum effect of the US dollar.
The dollar may not have sucked all of the life out of the pound just yet. In the weeks since its historic low against the dollar, the value of Britain's currency has climbed back. Japan's intense efforts to rapidly grow its economy after the Second World War propelled it to become the second largest economy in the world after the US. But in the past decade, China's economy has usurped it. That said, the yen remains the 3rd most traded currency. Japan's currency has had huge declines against the dollar since late 2021, worse than the euro and the pound. It's nowhere near as exposed to the energy crisis as European economies, so what's causing this decline?
We have heard over and over again that the Bank of Japan's policy of what they call managing the curve was brilliant. That, the Bank of Japan had achieved the wonderful situation by which 270 or 230% debt to GDP didn't matter, in which deficits didn't matter, and that the Bank of Japan would control bond yields forever. And it's a joke. It's a complete fallacy.
The Bank of Japan has kept its interest rates at ultra-low levels and has prioritised low borrowing costs over taming inflation. For decades, the Japanese economy has been running on stimulus, but has failed to achieve growth since the 1990s.
The Bank of Japan is clearly doubling down on its policy. The only way that they find to allegedly strengthen the yen is by selling reserves, selling foreign reserves, which is even worse in the long term if inflationary pressures remain, which, by the way, they are.
If a central bank can't or won't live up to its mandate to control inflation, the markets lose confidence. And that's what's currently happening with the yen. It's even led to foreign traders borrowing yen, only to then buy dollars and dollar-dominated assets, pushing the yen down even further. With all the reserve currencies coming down against the dollar, what may need to change for the greenback to lose its throne? Historically, the leading reserve currency is directly correlated with the state that is the greatest power. This is for two key reasons. The largest power is usually the largest economy, and because it can enforce and secure a monetary order.
The only challenger would come if there was a government that was a global leading economy, that was wise enough to understand that the way in which you become a world reserve currency is by having a strong currency, not a weak currency.
Thanks for watching. You can read all our original market analysis and much more about Forex markets by visiting capital.com.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.